Thanks for tuning into this broadcast. This morning, there were large bulk deals that happened in two of the Adani Group stocks, and post that at about 11:30, 12 or thereabouts is when we got to know that it's the GQG group or GQG Partners, which has put in some money along with IHC and other investors. And therefore, it's interesting that when you map the timeline of what's happened over the last 3 months, starting March 2nd, 2023, GQG has cumulatively at cost or nearly $3.5 billion in the group. Now, what does this mean from a large global investor looking at Indian assets perspective? What does it mean from GQG looking at Adani and other people looking at the Adani Group assets and other assets as well? I think that's the question that we posed to Deven Choksey. We were talking about just this before this interview started, and I think the 2 points that he made was one, specific to the kind of valuations that the Adani Group assets are available at, and two, the view that global investors currently have towards India, especially built up over the last six odd months. Deven, great having you. Thanks for taking the time out. First, so Rajiv Jain was on record with me sometime in the month of May, if I'm not wrong, talking about how he was completely confident that things would move ahead in a smooth fashion, and which is why post his investments or post GQG's investment on March 2nd, they put in another $400-500 million to work. And today they've put in another $1 billion to work. I mean, give or take, along with IHC and some others. What do you make of this?
Hi, Neeraj. Thank you for having me on the show. My understanding on the subject is that infrastructure assets, which an investor is wanting to buy into the portfolio, there are two preconditions to that. If these infrastructure assets are in making or they are already made. If these infrastructure assets are already made and constructed or going on live, that means his time to market is basically covered up as far as an investor is concerned. Second thing, the price at which I think these infrastructure assets have been constructed. Suppose if my current price is X and if I have constructed these assets at X minus price, and I'm getting an advantage due to the market price of the stock to buy these assets at the current market price. In my viewpoint, I think I would probably take the view that, okay, next 25, 50 years, if I have to be invested in, if infrastructure assets are already operationalized and generating revenue out of it, might as well buy at the current market price because I think in future these prices are likely to go up. That is where I think I'm more comfortable out. And that's where I believe that I think the requirement for buying into India infrastructure story has started gaining momentum. Till the point of time, I think the Adani group of stocks, I think, were commanding higher amount of valuation. The question was on high valuation. Today, the question is on how much below it can go down to, given the strength of the assets. And that is another reason for which I think the transaction for buying into these assets. And the third important reason, which according to me, I think would be that every global investor is looking at India very favorably. After, I think, successful marketing of India and India infrastructure story, I believe that every global investor wants to buy into. So the one who has basically taken an early entry, he clearly has an advantage. And the current market price possibly makes that condition possible to buy and take an early entry. I believe GQG has been working on Adani for last so many years, and probably I think they were waiting for this opportunity to come by when the prices came down because of the reasons. And I guess I think they lapped it up and they prepared this portfolio, the build this particular portfolio.
Got it. Just wondering, I was asking this to somebody else earlier. With the GQG investment into the Adani Group, or some of the other FI investments that are happening, or FDI money that is coming in, there seems to be a fervor for Indian assets. You were maybe you made this point in an earlier answer and I've missed it, but you also made this very relevant point to me sometime back about how the cost at which assets are built versus what they are available right now would also mean a strong investment case for investors who are looking to invest from a really long-term perspective.
Yes, Neeraj, absolutely. And I'm glad that I think this point has come up for discussion. Assuming that I think some of the assets like port have got constructed at a price which is 55 to a dollar, vis-a-vis the current price of 80 plus to a dollar. And I think these particular assets have come down as far as the stock prices are concerned because of variety of reasons. Now, if this particular price is come down, and if you are seeing the operational port assets, or even this case greens asset or road assets in case of Adani Enterprise, I would rather like to believe that I think my waiting period for generating the revenue in my portfolio has significantly been down. On the contrary, I think I'm buying when the assets are ready. Infrastructure assets takes longer time to get built, and I think these assets are ready. They are already cash generating. They are operational. So, in my viewpoint, I think that is a very strong proposition for many investors to look at this particular portfolio systematically. Second point, I think the investors do understand that in infrastructure assets, the debt is a burden till the time it generates a cash. Moment I think it has started generating the cash, debt is no more a burden because I think the debt is being paid out of the cash which is being generated. And that's where equity investor would see relatively lower risk, or I think I would say it sees the margin of safety in the risk. And that's where I think he would put in money into the infrastructure assets. So this could be a few reasons I think for which I think the infrastructure assets are being bought into, and that too with bought into by the marquee investors, the long-term investors who are seeing the visibility for next 25 to 50 years of generating cash out of this infrastructure assets. So I'm not completely surprised. On the contrary, I believe that I think people with the large pockets or deep pockets would probably find it very meaningful to buy into some of the quality infrastructure assets which Adani Group has created.
Okay. Then one final question. Eventually, it is always the market follows earnings growth. And, I mean, the thing is, in his interaction, when I had asked him about his rationale of buying into some of these assets, Adani Group assets, he'd spoken about how the valuation of infrastructure done is incorrect according to him, and he values infrastructure assets very, very differently. Now, without going into that piece per se, I would love to understand from you that if you are constructive on India capex, India infra, some of the Adani Group assets, as you have been vocal about them in the past, what is your benchmark of buying, holding, or selling any of these assets?
So it's a very deep question, I must say, Neeraj, and I'm glad that you are raising this question. Maybe I would not be in a position to give a complete answer to every asset that the group is holding, but I would probably, I think, give some answer to that part of it. That suppose if your road assets are already in place, or if your solar assets are already in place, solar power assets are already in place, and if you are constructing this particular portfolio at a CAGR rate of say 15 to 20%, okay, so that means on existing base of assets, you are further constructing the newer capacity, which is absolutely, I think, in line with the demand in the industry and the market. So from that point of view, you have 15-20% kind of a growth. Your current GDP growth may be somewhere around 7%. You are developing the portfolio of assets at around 15 to 20%, which is 2 times to 3 times kind of a growth. To me, I think as an investor, I think it gives me an assurance that on one side the economy is growing, on other side I think the asset portfolio is growing. There cannot be a better situation than this, where the asset portfolio grows along with the growth in the economy. And that becomes, I think, a compelling proposition for most of the long-term investors who are having deep pockets, as I explained earlier, to buy into the infrastructure assets. Maybe different assets would assume different kind of cash flows. Like your transmission assets would assume 95% of the revenue as cash flows. Your port assets would assume somewhere around 60 to 65% kind of a revenue cash flows as a part of your revenue. So different assets assumes different kind of a cash flow, but the fact remains that these assets are operationalized and they are growing further with the new capacity that is being added in.
Got it. Great. Okay, Deven, we'll leave it at that. Thank you so much for taking the time out and being with us and giving us your thoughts. Much appreciated.
Thank you, Neeraj. Thank you so much.
That's Deven Choksey of DR Choksey FinServe. Standard disclosure, of course, the Adani Group owns 49% stake in Quintillion Business Media, which is the owner of BQ Prime, which is the platform on which you are watching this broadcast. Thanks for tuning in. Talk about meeting often. Deven, where do you live, by the way?